Hello, good day audience. This is your instructor Abdul Rafi and we are doing lectures on budgeting, that is paper 4 cost and management accounting for A levels accounting 9706 paper 4. So our topic of budgeting today is how do you make the production budget. Very important. Students need to understand what is actually production budget. So the production budget will tell you how many units you are going to produce on monthly basis based on your factory, based on your location, based on your manufacturing and trading business. Production budget will help you in decision making and help you in preparing your budget, how many units you will have to produce. So based on that, it is very simple, not difficult, and we are looking from the perspective of a manufacturing business because the question will tell you about manufacturing business. Okay, so we have the sales budget of Z Limited. We are doing a question particular past paper. The sales budget of Z Limited for the 5 months are given. So you already have been given the sales units, that is 3000 January unit sales, February 4000, March 4800, April 4400s, and May 5000 units. Okay, then we have been given some additional information where all the information is provided to us students, and we'll have to take help from there. Okay, now what is the requirement? Part B, prepare the following budgets for each of the months of February and March 2020. So we have to prepare the budgets, that is we'll have to first make the production budget and we'll have to make the purchase budget as well for the 6 marks. Okay, but understand, always remember students, the first main thing, production budget will have to be made first. Okay, once you make the production budget, then you can only make the purchases budget. Okay, so this thing will only come after this thing. Okay, first thing will be production budget making, and then you can make the purchases budget. The second important thing, for production budget you will have to need the sales units. Okay, so if you don't have the sales units, then it's an issue. Okay, you will have to first find the sales unit, students. Okay, so let's move forward. First adjustment is finished goods inventory at the end of each month is equal to 20% of the following month's sales. So here we go. You need to understand, students, that you will have to find the closing inventory as well, and finished goods inventory at the end of each month is equals to 20% of the following month's sales. I'm going to explain them. The remaining two of the items are linked with purchases budget, so you can skip them at the moment. Only for us the first adjustment is very important, that is the closing inventory. Finished goods inventory means that the closing inventory at the end of each month is equal to 20% of the following month sales, which means that, let's say if you are in February, the February closing inventory will be March sales 20%. Okay, whatever the March sales are, 20% of that will be the closing inventory of February. Okay, that's how it goes, 20% of that. Similarly, if you are in April, May sales of 20% of the May sales will be your closing inventory for April. Okay, following month means the next month. Okay, students, this is very important terminologies that students need to understand. A lot of the questions, there's a very basic example that I'm doing for everyone, so hope everyone gets this very clearly and easily, that whatever the closing inventory, how do you find it? The next month sales, whatever the percentage is given, 20% of the next month sales is your closing inventory for the current month at the end of each month. Okay, so once you are familiarized with the question, let's start working, because the examiner wants us to draw the February, March data. Okay, the examiner wants us to draw the production budget for February and March, but always remember you will have to take help from the previous months and the next couple of months. Okay, in budgeting chapter, all the information matters a lot. You will have to take help from all the information that is provided. So let's get started. We are making production budget, and this formula is very important. Okay, so students, this formula is very important, and this is a basic formula from AS level accounting as well, cost and management, absorption, marginal costing. You can just refer that whatever the opening inventory units are there, you add the production units, subtract the sales units, you will get the closing inventory unit, students. So let's start with the sales units. Okay, so here we go. We are starting with sales units first. Always remember, production budget will start with the sales units. So what are the sales units for February and March? 4000 and 4800. Okay, so let's write it down here, 4000 and 4800. Okay, so these are the units for sales that is 4,000 and 4,800. Because we are starting with sales, so in sales we'll have to change the formula, and it will be sales if sales is going to the other side, that is the right hand side. So you will have to add the closing inventory in it, and you will have to subtract the opening inventory, students, to get the production unit. So let me write down the formula as well. The formula will be whatever the closing inventory units are, we are going to add those, okay, and we are going to subtract the opening inventory units to get the working. Okay, so let's do it here. Subtract the opening inventory units, okay, and we will get our production units. Okay, that's how we'll get our production units for February and March as well. Okay, students, so let's work it out now. So here we go. If we need to find the closing inventory for February, okay, students, follow carefully. The marks are for these. The 4 marks question is this. Usually they ask you around these type of questions for these marks, okay. If you have to find the February closing inventory, it will be the next month 20% of the sales units, 20% of the following month sales, which means if you need the February closing inventory, it will be 20% of 4,800. Okay, so hope everyone gets this. It will be 20% of 4,800. That will be, sir, 960. So let me make a working here as well and working there as well. That this will be very simple. That is 4,800 into 20%. That will be 960 closing inventory units. Okay, so this will be closing inventory 960 units. Okay, similarly, if you need March closing inventory, it will be related to the April sales. Okay, the next month of March is April, so if you need to get the March closing inventory, you will have to have the April sales, and April sales are 4,400 as provided by the question. April sales are 4,400, sir. Okay, so you do again the same thing by saying that it will be 4,400 into 20%. Okay, and that will give a this is a very basic and simple understanding to start your concept learning of this. So that will be 880 closing inventory for March. Okay, so you got 2 marks for finding out this thing. Okay, students, so that will be 880 to add here. Okay, and you already know the basic understanding and purpose that whatever the closing inventory is for 1 month, it will become the opening inventory for next month. Let me simply give you an example. Whatever the closing inventory is for 2023 end of year, it will become the opening inventory at the start of the year of 2024. Whatever the closing inventory is at the end of March, it will become the opening inventory for the month of April. So similarly, whatever the closing inventory is for February, it will become the opening inventory for March. So here we go, you have to subtract this. Okay, 960. But what about the opening inventory of February? Hope everyone gets all the values here, that the opening inventory of March will be 960, because opening inventory of March is equals to closing inventory of February. Students, I'll repeat the point. Opening inventory of March will be the closing inventory of February. So how do you get the opening inventory of February? It will be simple. From January perspective you can get, because you follow the pattern here, students. The pattern is very simple. Whatever the sales units are April are, that becomes the closing inventory of March. Whatever the sales units are for March, they became 20% of that becomes closing inventory of February. So whatever the sales units for February are, 20% of that must have been the January closing inventory, and whatever January closing inventory was, it will become the opening inventory of February. Okay, students, so here we go. It's very simple and understood that this 800 closing inventory must be for the January, right? And whatever the closing inventory for January is, that will become the opening inventory for February, and that is why it will be 800 subtracted. Okay, students, here we go. You got all 4 marks here, and you can now get the production units very simply and easily. Just add and subtract. Opening inventory will be subtracted and closing inventory will be added. So here we go, students. Production units are done. Any questions can be asked in the comment section. So 4,800 plus 880 minus 960. So I get that 4,720. Okay, 4,000 plus 960 minus 800. I got that as 4,160. So these are the production units, and these are correct with the marking scheme as well as understanding purpose as well. Hope everyone gets it. Couple of important summary points I'll repeat. Whatever the closing inventory is of 1 month, it will become the opening inventory of the next month, of the following month. Okay, students need to understand following the pattern is very important. I just followed the pattern. Whatever the sales is there for the next month, 20% of that becomes closing inventory. So you just follow the pattern and you will get the opening inventory. You will get the values like this purpose. Okay. So here in a nutshell, that's how you find out production budget. A basic example and lecture to give you starting purpose. How do you make production budget? Because a lot of questions are tested on production budget, students. Thank you. Hello students and welcome back to Abdul Rafi Subhan's channel. Today we are going to discuss the purchases budget now, and this is a continuation lecture from the production budget. So make sure everyone is focused, copying and understanding all the concepts. What is actually purchases budget? From A levels accounting, cost and management, budgeting section, paper 4, that talks about budgeting. A lot of budgets we have to make, but at the moment we are learning how to make purchases budget. So purchases budget is basically, it will talk about how much the raw materials requirement is there in every month, how much raw materials you will require, and you will have to work out, you will have to manage the inventory of the raw materials as well. And that is why, just similar to the production budget, we are going to make a purchases budget as well. I'll repeat the point again. Make sure purchases budget can't be made without the production budget first, and production budget can't be made without the sales budget first. So this lecture becomes a very important continuation part for both all the students. Okay, so here we go. Purchases budget in kilos we have to make for February and March. I've already written the details and instructions, and now the remaining two will work it out. Each unit of finished goods, the remaining two adjustments we have to work out. Each unit of finished goods will require 3 kilos of direct material. So whatever production units you got, whatever production units you have to produce, whatever production units you have to produce in February, it's very simple in front of me. We have to produce 4160 units in February and 4720 units in March. You must be wondering why I have written April month as well. I'll tell you in a while. It will make a lot of sense then. Production to be done, production units to be made, and because this thing needs to be done in kilos, as they are focusing here on kilos, so you'll have to multiply with the per kg raw material requirement, that is 3 kilos per unit. Okay, so here we go. This will be multiplied with the kilograms. Okay, so you got to say here that multiply by 3. 1 unit requires 3 kilos of raw material, which will make it simple to get them these two. Okay, so here we go. Let's do the calculation. 4160 into 3, I got that as 12,480 students. Okay, and similarly 4,720 into 3, I got that as 14,160 as well. Okay, so these are the two raw materials required. So let's write down. This will be the raw materials required for February and March respectively. Raw materials required in kilograms. Okay, so this is the raw materials required in kilograms. So this is the second adjustment done. Let's move on to the next adjustment. Second, direct materials are purchased every month, so we will buy them every month. Okay, and for second adjustment is done. First adjustment was related to production budget, students. Second adjustment related to purchase budget. Now the third adjustment also related to purchase budget, the direct materials inventory. Follow very carefully. Just like we have a finished goods, just like we have a closing inventory of the units, we have the materials inventory as well. So the direct materials inventory will be also at the end of each month 10% of the following month's production needs. The reason I chose this question as an example to explain, students, the main reason is this, because this is a very simple, basic understanding budgeting question with no tricky and with no complexities. It's very simple and to the point. Okay, basic question. It's the 10% of the following month's production needs. Now whatever the following month is, for February the following month will be March, for March the following month will be April. That is why we need the April data as well to work out whatever the production requirement is for April. 10% of that will be closing inventory of March. Similarly, whatever production requirement is of March, 10% of that will be the closing inventory for February. So hope everyone gets this. Let's quickly work it out. So here we go. This is going to be, sir, the closing inventory. Okay, so closing inventory of the raw materials, make sure mention that. Okay, so let me mention that raw materials closing inventory, and again I'm going to add this one because closing inventories are added and opening inventories are subtracted in this. So it's very simple, sir. You can write down that this will be 10%, because it's written, just let me confirm. Yeah, it is 10% of the following month's production needs. Okay, so be very careful here and make sure you find out 14160 10%. Okay, so let me do it here only. 14160 into 10%, although we know the answer, but just for students understanding, who those who struggle with mathematical calculations, it is very important to get this correct as well. Okay, it's all about practice at the end of the day for mathematics and accounting. Learning with me makes it easy. 1416 is the closing inventory for raw materials for February, because the production requirement for March is 14,160, and this is the falling month for the February, so 10% of that is the closing inventory for February. Okay, similarly now we'll have to work out this figure. Okay, how will you get the March closing inventory of raw materials, students? And for this we need to get this value. For this value we need to go up and find out the complete production units for this as well. Okay, so again we follow the rules, we follow the workings, and we follow the pattern. Okay, so the pattern says that whatever the closing inventory of March, I'm going slow students, whatever the closing inventory of March is, sir, let me mark it out. The closing inventory of March is going to be, sir, the opening inventory of April. So here we go, the opening inventory of April becomes 880, and let's work out whatever the closing inventory for April will be, and we can get the production units. Okay, so how do you get the closing inventory of the production units? Make sure follow my wordings very clearly, students. Closing inventory of April for the production units are what? It will be the following month sales 20%. It will be the following month sales 20%. That is why I'm focusing again and again in these type of budgeting questions. You will always have to take all the data into account for. So here we go. 5,000 is the May sales, and 5,000 into 20%, I believe it's 1,000. So 1,000 units is the closing inventory for April. Okay, 1,000 units. So let me just write down that as well. The working for this is 5,000 unit sales of May into 20%, and I got 1,000 units of closing inventory for April. Okay, let me repeat it. Closing inventory, students, will become the opening inventory of the next month. If you have to find the closing inventory for the production, you have to just go for the next month's 20% sales for our question. So let's just quickly calculate. 4,400 plus 1,000 minus 880. I got that as 4,520 as the production units. Why are we doing this, sir? The only reason we are doing this is because to get the March closing inventory raw materials requirement. We are doing this only to get the closing inventory of raw materials requirement, and that is why it is of 6 marks. So you bring it here, 4,520 multiply by 3, you get how much is the production requirement. 13,560 kilos you need to produce for April, and out of that 13,560 kilos, you will have to give 10% will be the closing inventory for the previous month, that is March. So it will be 1,356, 10% of 13,560. So here we go, let me do this one as well. 13560. Make sure show as much working to the examiner as possible, students. Okay, 1356 kilos of raw materials. Okay, raw materials kilos that we need, that will be the closing. And similarly, that's how we go above. That will be minus the opening inventory now. Opening inventory of raw materials, that is, and everywhere the concept remains the same. Whatever the closing inventory is of for this month, it will become the opening inventory of the following month. Focus my words, students. Whatever the closing inventory of this month, it will become the opening inventory, it will become the opening inventory of the next month. Okay, so here we go. It is going to be 1416 is the closing inventory of February. It will become the opening inventory of March, 1416, and you just only need the opening inventory for February. How do you get this? It's always, remember, you follow the pattern. Okay, and what is the pattern, sir? The pattern is simple. The pattern is clearly depicting that this is coming from here. The next month raw materials requirement, you get the 10% of that, that is closing inventory. Next month raw materials production requirement, 10% of that is closing inventory. So for January, the closing inventory of January will become the opening inventory raw materials requirement for February. I'll repeat my point, students. The raw material requirement for January closing inventory raw material will become the opening inventory raw material requirement for February. So here we go. It is going to be 1248 the value. And here we go. We got the answer correct. 1248. 12,480 into 10%. So you are going to write it here. 1248 kilos of raw material as the opening entry to be subtracted. Hope students get this. This is coming from here, okay? So everyone gets this. This is coming from the January data. Hope everyone is clear on this, students. Make sure to follow the lecture very carefully, and that is you will get the purchase, the direct materials to be purchased, okay? The materials or the raw materials to be purchased, that are basically how much raw materials to be purchased in February, or you can say that direct materials requirement for February and March respectively are 12,480 plus 1416 minus 1248. We got it as 12468 12648, my bad, sorry, a calculation error. 12,648 kilos of raw materials are required to be purchased, and for March respectively they are required to be purchased as 14,160 plus 1356 minus 1416. I got that as 14,100 kgs as the requirement for raw materials, 14,100 kgs as the raw materials requirement to be purchased for March. You don't have to do for April, and because it's not the requirement, but you understand that there are marks for doing the April calculation, and you can't get the answer, student, if you don't do for April. That is why budgeting is one of the most difficult chapters. Students find it difficult. It is because of this reason, because you have to accommodate all the information that is given. You have to take into consideration all the information given and work out your findings, your answers, and then get the complete answer. So here we go. Production and purchase budget in a complete one form is there in front of you, students. Make sure to practice questions. We'll come back with another video soon. Thank you.